Hey, what's going on, guys? Gonna do a quick update here on Bitcoin, the crypto market, which I always say is basically just Bitcoin. This is again my main scenario here. Um, we're almost done here with this fifth leg. We had an ABC correction on the 4-hour chart. I was finally able to renew my trading view subscription, so shouldn't see any more ads or anything like that. But if you look at this from an Elliott perspective, this is basically as it sits now. If we are in fact done here with this dead cat, as I've been calling it a dead cat for 3 months now. So basically this would be a flat correction. You have basically, you can break this up. Everyone has this as an impulsive A, which I know that sounds contradictory, but there is impulse within corrective moves, especially when you have this ridiculous just dump and no retracement. So you can actually break this up into 3, which would be a 3, 3, 5 correction here, which would be a flat. As you can see, it came up short of the top of the A, so this is very typical of a flat correction. Really quickly, this is what if this 4 is in fact in, this is what we should see at this point here. We should see, and I've gone through the subwaves, and I believe that this bounce up here is actually the 4 of the 5 of the 1. So basically, we should see something like this, and this would be perfect actually to test this. There's actually a trend line here. I don't have it drawn. This is just the price. This actually no, this is the trend line. This red support down here. Actually, depends on how far I move out. But anyways, I have a support drawn here, but it doesn't really matter. Basically, what you would expect and what I'm expecting at this point is something like this, a nice 50% retracement, but in fact, it does not have to go that high. Something like this here. So it would, in fact, I mean, the target is here. I don't think it necessarily needs to go that far, but we'll see. We'll see where this ends here. But anyway, the point of this is that we should see a impulsive motive move down at this point to challenge this low here, which I've also been saying forever. And I don't like to go too far ahead and be predictive, but the chance of this low being the low and the end of this bear market, as I've been saying, is like less than 10% chance. But it's very possible, and there is another scenario that does in fact have this ending this bear market and ending this correction, and now we're off to the moon, as so many people, especially recently, and I was saying also in my last video, all it takes is one pump and the whole world is bullish, and one dump and the whole world is bearish. So if you follow Twitter and there's other YouTubers, it was all moon, we're never coming back down. Yeah, whatever, come on. We pumped, and we never retraced. So even if you are bullish, you have to expect a retrace. I mean, I had also drawn this trend line here, just as this little move here. As you can see, we caught. I didn't make this a little thicker so you can see it. I'll make it a better color too. But as you can see, I mean, we caught right on this uptrend line here. There's also this uptrend line, which is now broken. And the way I draw trend lines is a little different than most people, but you can see this was broken, and you know it wouldn't surprise me to retest this up here, but you know you can. This is kind of forcing stuff at this point, but you know, sure, this you know this hasn't broken yet, so technically it is a support. Um, but as you can see, this volume node here, massive trading volume in this area, so it does make sense to catch here and you know push back up a little bit. But this is still my main count. You know, the triangle technically is still valid, but I don't like how far we pushed up as far as that triangle count is concerned, because now everyone is going to see this as an ascending triangle, which is, you know, for those that don't know, this is extremely bullish. You know what I mean? So I don't like this as a triangle at this point. Because in order for this to be a triangle, this has to be wave 4 or wave X or wave B, and I don't think that it constitutes as any one of those. So, you know, as far as that's concerned, now as far as being bullish, and I mean, there's several little pieces of evidence that this is nowhere near bullish. This pump up, this bounce here. Number one, we just took out a week's worth of bullish movement in a 4-hour candle, and really it was like a 1-hour candle. So that's not bullish when you take out a week's worth of gains in an hour. So, and that's been the general theme of this entire bear cycle, is we take forever to gain in price, and the bears just wipe that out in hours. So, you know, that also another piece of evidence here is if you look at this volume on this candle, this dump candle, this is the highest 4-hour volume we've had in a couple of weeks. And in fact, it's the highest. If you go to the 1-hour chart, this is the highest 1-hour volume candle we've had since, Jesus, right around Thanksgiving, around November. This is the highest volume on this dump that we've had in 3 months, or about 3 months now. So that is not bullish in any way. So, you know, this is this count, very simple ABC flat correction here that did not make the top of the A. So, you know, I have us, if this is to play out, I have an impulse wave down at this point. So basically, if this count is to play out, any bounce here is just an opportunity to short, like I said. So, you know, we're looking for something like this. You know, in fact, we should get some type of 535 correction at this point. So, you know, that's that. Now, I do want to go over another count really quickly, and I have to change over to the 1 day, and I do want to, you know, just throw out that the bullish scenario here. And basically, I'm just going to take this stuff off here, and I, in fact, did not do the work on this count. Shout out to Sam at Trade Devils. He went through this count, and you know, the nice thing about him is that he's so skilled that if he's gone through this count, I don't feel like I have to go through the subwaves, because, you know, he's already done it. But I have not done this work, so I don't want to take credit for this count if it, you know, if it does play out or if it doesn't play out, because it's, you know, it's not my work. And basically what he has, or one of his counts is, and it's very valid. I mean, it's basically a triple, I'm just going to cut it short here, but it would be a W, X, Y, X, Z to complete this correction. And in fact, this here is 1, 2, 3, 4, 5. We should see something like this. Basically, we should see an impulsive wave. And although the discount is in fact valid, again, one of the things I do not like about this count is if you have this move here as the 3, you should see more volume than the proposed 1. And in fact, we're seeing, you know, we're not seeing the green volume that we should be seeing, basically is what I'm saying here, for this to be the 1. But one of the things that also, again, that also leans against this count is basically, I have this here. I have this in the wrong place. I'll move it in a second. But I've gone through this a couple of times, and I'm just going to go over it really quickly. Is basically W, X, Y, A, B, C to complete down here. If you take this off here, you have this fib level here, which if you take the length of the 1, the proposed 1, again, top of the 2, you know, the probability zone, the high probability zone for a 3 to end is between the 1618 and the 175, which I don't have drawn here, but you can see, I mean, it's right to the tick here. So it's very difficult to argue this as a 3. And we're putting in, or we've already put in the 4, and we're coming down for the 5. Now, the other part of this is, here's the other tricky part of this. If you have this as, in fact, that WXYXZ pattern, let me get my fib back on here. You have WXY, and so this would in fact be A, B, C, or WXY, this 3 pattern here. And if you follow this here really quickly, get this on. This is actually, sorry guys, let me just go the other way really quickly here. Okay, so you have this here, which is the proposed A here, okay, and then you would move this down to the B. Hold on a second. Move this here. Okay, we would have this here, and then this would be the B. So interestingly, this is prime location for a C to finish. If in fact you're taking this up here as, because basically really quickly what you would have is, again, you would have W, X, Y, X, Z down here. And this would be the bullish case here. And you would have, so you would have A, B, C. And so this would be A, B, C to finish down here. And if you look at this, I mean, this is also prime location for this count to finish down here. So, you know, it is very, very technically valid just on the couple of fib levels that I pulled. So, you know, this is not out of the realm of possibility. But as far as I'm concerned, this count is much less likely here, this WXYXZ as a bullish scenario. But that's basically going to be it for me with the Elliott wave analysis. I'm going to, in fact, for all you guys that want me to make these videos shorter, you know, that's it as far as Elliott wave. I am going to go over now, for anybody that wants to continue watching, just simple trend line analysis and why this, first of all, you can see we're channeling here. We're bear channeling, and we bounced, and now we're testing the top. So as far as, you know, this bullish craze over the past couple of days, it's just insane. I mean, that doesn't mean that we're not going to reverse here and we're not going to be bullish, but for, you know, to think that at this point, I mean, like I said, also, another thing that shows just extreme weakness in the market, just as far as if you're Elliott trader, or even if you're just a trader, period. I mean, the dead cat bounce area, and the 4 should generally, the high probability area is, you know, if you were to take the top of the proposed 2 to the, you know, basically the entire length of 3 wave, typically the 4 gets to the 382 at least, and usually ends up between the 382 and 50% retracement. We're being rejected by the 236. I mean, we're not even in dead cat bounce territory yet. You know what I mean? So this shows weakness. This does not show strength. You know, as far as the Elliott wave, and also as far as just a bullish perspective here. So, I mean, you expect the dead cat bounce to hit the 382, which would be 4760. We haven't even broken the 236. Well, that's not true. We did wick through it, but we can't hold it. There's nothing left basically at this point. I mean, like I said, we took out a week's worth of gains in an hour. So the market is showing weakness here, just as far as the major trend. So I mean, let's you know, let's not get too excited here over, you know, we dropped 52% in you know what, a week, 2 weeks, and we can't even get back to 38% of the area that we broke down from. So that's not bullish. You know, it's not bullish at all. It's like not even bearish. It's like below bearish, because you would expect, like I said, you would expect the dead cat bounce to at least hit the 382. So this is just really quickly, and I will also make this darker in a minute. This is the 1 day. Actually, I'm going to switch it to the 4 hour. I don't really like drawing trend lines on that long of a period, because the longer the period you draw the trend line, the more apt you are to get a fake out. So, you know, I like to draw them on a shorter time frame. Usually I like the hourly, but this is such a long trend that, you know, I do not use wicks when I draw trend lines. I don't believe in them. I believe that the more important trend line is actually where the candle closes and where the candle opens. So that's why I don't use wicks. But okay, the only reason I'm drawing this trend line is because I feel like the next time we hit the top of this resistance here, we're going to break through it. And why that is because generally speaking, it's the third test of a resistance and a support that breaks. And you can see we have one test fail, 2 tests miserably fail. This is the third test here. So I do not expect to hit this trend line and not have a massive breakout. So the fact that we shied away from getting up here is not a good sign. I would at least expect a push up to try to test this trend line here, but you know, we fell short. So, but like I said in my last video, I was expecting a fake out. You know, that's basically it here. The nice thing about if you are a bull at this point and we do break this trend line, we have massive gap here as far as volume to just shoot up like there was nothing even here as far as resistance, even though the 47 area will definitely be resistance. But if you look at the volume here on the 4 hour, and I know it's different on the 1 day, but you see how we just slammed straight down. That's because there was no volume here, especially on the 1 day. I'll go back to the 1 day, but you can look at this. There was no volume here on the way up. So anytime that happens, you do not have the support built up as far as enough people buying and selling and enough time spent in this area. So that always, you know, and I noticed one thing about Bitcoin is that throughout this whole trend, throughout this whole bear market, it seems to me like it's trying to fill these pockets of voidedness that it created on the way up. And it's almost like it's trying to turn every support into resistance. And this is very healthy, actually, in the long term. But, you know, as you can see, I mean, there's nothing here as far as resistance, just like there was not much here as far as support. We do have this 200-day moving average, which will offer resistance, but I like our chances at just blasting through if we do break this trend line. So I'll do another video maybe tonight just on trend line and macro analysis and a longer term chart, which is because we're in this huge downtrend and we are dealing with macro stuff here. This I know a lot of you guys just trade hourly. You don't care about this stuff, but you know, there's all macro stuff going on here. So it is very important, even if you are just day trading or swing trading. So, but I'm just gonna wrap it up. I'm trying to keep the videos short. I know some of you guys complain that the videos are too long, which is fine. I appreciate the input, and so I'll try to keep them short, and I'll just more tailor my videos to, you know, a lot of you seasoned veterans that are trading, and then I'll go into more like, you know, you know, people with less experience and stuff like that. So I think I'm boring some of you guys when it comes to some of the analysis I do, but you know, I'm trying to also cater to everyone, not just, you know, you guys that, you know a lot of the stuff that I'm saying already. So also I want to give a shout out to my partner Rado, who is always on point with the counts. I mean, he's always updating, and you know, his last call was inaccurate. I think he missed one of the subwaves, but I mean, the guy, you know how many people got fooled on that move, that pump up that just happened. So, you know, I mean, like I said, I was expecting a fake out up there, but that's not on anything really technical. That was just more of, you know, my own gut feeling. And real quick here, I'm going to also go back over the, well, actually, you know what? I won't go over the shorts and longs right now. I'm going to save that for my later video when I do just trend line analysis. But in short, this looks extremely bearish. We should get another bounce up here to put in our 2 and then start to head down. There is another count here. I'll go over that also in the video later, but that has us pushing back up. But either way, it's still corrective if we do that, and we are going to head back down. It's just a matter of, is this bear market going to end below 2,000 or, you know, 2,850 or 2,400 area? So, you know, but that's going to do it, guys. Thanks for watching. If you like, subscribe, comment, you know, any input is greatly appreciated. And I'll check you guys next time. Thanks for watching.